Hey there, future millionaires. Welcome to the Profit Prophet. Today we're going to briefly touch on chart basics. These will help if you're new to trading, reading charts, or if it's just been a while. We'll talk about what a candlestick is and what it tells you. We'll discuss what the words support and resistance mean and what they look like on a chart. We'll go over how to use support and resistance levels to form channels and the three basic channel types. All right, let's get going. What is a candlestick? First of all, you'll notice on most basic chart screens, you'll have red and green candles. As you may know, green candles indicate a positive move for that day. Red candles indicate a negative move for that day. The body of the candle, that's the filled out part, that represents the opening and closing prices. If it's a red candle, the top part of the body will indicate the opening price, and the bottom part of the body indicates the closing price. If it's a green candle, the bottom part of the body indicates the opening price, the top part of the body indicates the closing price. You can see those little lines above and below the body. Those are called wicks. That just simply represents the entire day range. So you have the open, you have the close, you have the high, which is the top of the wick, and the low, which is the bottom of the wick. We'll get into, in a future date, what wicks tell you more specifically. The shape of them and the order of them do have some bearing. But for right now, we'll just stick to the basics. So again, a red candle, bottom equals the close, top equals the open. A green candle, bottom equals open, top equals close. Now each candle does equal the time frame in which you have your chart set to. So right now this is a daily chart. So looking at this chart, this equals one entire day, this candle. If it's a 4-hour chart, each candle indicates 4 hours. So each candle will represent whatever time frame you have set. Again, right now I am on the daily here on the Bitcoin chart. Okay, let's move along to topic 2. What are resistance and support? Resistance is best thought of as a ceiling. That indicates the part of the range which you feel is the top. That will stop it from going higher, or if it does break it, that will indicate that asset moving into a new zone. Support is the floor, so that would be the low part of your range, and if it would break down below support, that would indicate also a move into a new range, and that support would then flip into resistance. It would go from the floor to the ceiling. If something breaks out of the channel, that line of resistance would then become support because the asset price would be on top of it. Now, a horizontal channel, not a very great channel to trade. It's called a ranging or a chopping channel. So you'll see the price go up and down within this channel, kind of like a ping pong ball, from floor to ceiling, floor to ceiling. You can try to time those moves. You would need to use lower time frames in order to do that more accurately. But if you're on any higher time frame, what you're looking for is a break out of these channels, either below or above, and then confirmation that that will stay above the channel. A second type of channel is an ascending channel. You can see that is one that is rising. So what you'll see is the price chop within this channel up and down. And what we're really interested always is the line to the right. So in an ascending channel, this is called the support line. This is now our floor in just more of a vertical channel. Okay, so what we'd be looking for here is if price breaks out of the channel on the right side, on our support side. If we see that price break that support line, it will generally come back up to confirm and then drop. That would be a signal that we would want to get out of that trade, go either flat, which is neutral, or could even be a shorting opportunity. But generally in an ascending pattern like this, that's a pretty dangerous game because the overall trend would be going against you. Okay, the third type of channel would be the descending channel. That would be one in which the price is descending lower and lower. Again, we're looking at the line to the right of the price, future forward. Now that would be acting as resistance. So similar to resistance over here in the horizontal, it is now going to be bouncing off of that, and it'll be ranging inside the channel, perhaps hitting those edges, validating that as resistance. And what we're looking for now is for this to break out of that channel. That would indicate a possible trend change toward the upside. But again, if we're trading in these channels, every time this would be touching support, that's when I would think about dollar cost averaging in or adding exposure one way or the other. On a descending channel, when it touches the resistance line, that's also when I would be looking to add exposure. I would be looking to be in a short position or possibly selling some of my current stack, hoping to buy down at a lower price. Okay, that's a quick summary of some resistance support, a few channels, and some basic candlestick education. That's it for today. This is the Profit signing off.